cracked 2.5% after that FSSAI directive. IREDA is also down about almost 4%. But we spoke with Gautam Duggad, the MD and head of institutional equities at Motilal Oswal Financial Services yesterday. He expects the Nifty earnings to grow 13 to 14% for the full year. Also believes that the index is reasonably valued and sees better opportunities very much outside the Nifty names.
The first quarter, we have not seen any earnings cut. In fact, we have seen a marginal upgrade. So for my entire coverage universe, we have seen about 1.8% earnings upgrade for FY27. That sounds like music to the ears. Second, the number of companies beating estimates and meeting expectations cumulatively are 78% of the coverage universe. So only about 22% of the earnings companies have disappointed or have missed the expectations. Number of companies where earnings have been upgraded divided by number of companies where earnings have been cut is 1.7 times. This ratio was below 1 for a very long period of time. So early signs of an earnings revival, and more importantly and hearteningly, your top line growth is in a handle of 17-18%, which is highest since December 2022. So a bit of an inflation making a comeback is also helping because last 2 years, your nominal GDP was 8.5, 8.9%. This year, we are expecting about 13% nominal GDP growth. So 14-15% earnings growth for benchmark indices looks doable for next 2 years, but the real fun is outside Nifty. Last year, my mid-cap earnings grew 24%. If you exclude OMC, last year earnings growth for mid-cap was 20%. This year on that 20% base, again, we are expecting 19% growth. So fairly solid set of numbers. For Nifty, we are expecting a 13-14% earnings growth this year, EPS of, I think, 12.25. Now, within a 20% broad index earnings growth or my coverage universe earnings growth, you will always find 10, 15, 20 mid-cap ideas where growth is upwards of 30%. Similarly, small cap, whatever allocation increase you have seen in small cap portfolios in the last 2 months, it's happening because the earnings trajectory is changing now. On a base of 10%, 30% is doable because you have many sectors within small cap always look at bottoms up because sectoral, doesn't give you too much of insights. So you have a very low base of financials in small cap. Some of the other sectors are also having a low base. So I think the action is going to be outside of Nifty. Having said that, Nifty is looking reasonably priced, right? But, if we look at this data as a percentage of total market cap in India today, let's say if 100 is the market cap, the contribution of large cap is at a 2-decade low. The large caps are accounting for only 59 to 59.5% of total market cap of India, right? Now, if I have to play devil's advocate, I can always say that mid caps and small caps are already looking very expensive because the mid cap index is 28 times or 27 times. And small cap is close to 23, 24 times, whereas large cap, which is Nifty, about 18.5 to 19.5. So valuations is in favor of large caps, but growth is in favor of mid and small cap. And India is a growth market.